Hey everybody, this is Frank from AO Finance. Thank you very much for the positive comments. Please keep them coming in. What do you like? What is it that you dislike? Let me know. Keep them coming in. Last week, I'm in silver right now. You know what? Let me touch on silver. I like silver very much. You guys have known that I'm a big fan of silver. I'm not a buyer of SLV. I just use it to give me an idea of what's going on. I love rounds, silver rounds, bullion, whatever it is that you can get on the physical silver. That's what I like. Just like everything else, there's always a risk, but I personally like silver for the long term. I'll put it up above everything. There's a reason why. One day I will take a little bit of time just to dedicate it on silver, and I'll probably throw in a little bit of gold in there as well. Real quickly, silver's in a small little downtrend right here. That's the middle of the channel. And we see a nice little positive divergence popping up. The MACD histogram, nice little positive divergence. Not seeing much on the MACD, but it does look like it's starting to level off a little bit here. And the money flow has gone higher. Turned red a little bit, but still pretty decent. Now, the one thing that does concern me, there's also major support at 17. It's been holding for quite some time, but it is lower low, so that's something you have to keep in mind. The one thing that does concern me is that you see the volume, heavy volume on the sells, heavy volume on the sells, light volume on the buying. So it does concern me a little bit here, but personally I would love to see it pull back 16, maybe even 15, $14 a share. I would be an avid buyer at those levels. Oil, real quickly, oil, I don't really get much into it. It's, as you can see, it hasn't been doing anything here. It was alright, but I'm not a fan too much of watching the oil. Looks like it's bullish crossover here. RSI looks fine. This looks fine. 80 is very important, as you can see right here. Breaks 80, you're looking at 85. And coincidentally, that 85 would be right around the top part of the range. So that's about it. Okay, goodbye. Now, the US dollar, cup, I've mentioned this a while ago, cup, handle forming. Cup and handle forming, no volume, so unfortunately we can't see how heavy the volume is. I'll point out the negatives. RSI does not look strong. Looks obviously broke the 50, losing strength. Obviously bearish crossover in the MACD, and this is just plain ugly. Now, major volume, major support at 80. Nice amount of support at 82. You also have the 50 exponential moving average right around this level right here. I mentioned a while ago, right around here, that it would pull back to the low 80, $82 range. And lo and behold, it has done that, so we're looking good on that. Now, I want to move over to the daily just to show you something a little bit more in depth. Here's a downtrend on the daily. Again, downtrend. Now, as you can see, the positive divergence on the daily, positive divergence on the MACD histogram, and this is moving parallel. It doesn't look like it's crossing over, but this looks pretty strong. There's really nothing much going on here. Now, normally I wouldn't say this is a shot here because there's really nothing showing except indicators. You never want to move on indicators. You always want to see some movement on the physical pattern trading of the stock. However, the 50% Fibonacci was an absolute genius. He was a great mathematician. The 50% retracement, these are psychological barriers, which I'm not going to get into right now. Maybe one day I'll take some time and work on indicators and patterns and this and that, but today, no. 50% Fibonacci retracement is 81.47. We're right around that level. The 50-day exponential moving average on a weekly was right around there. There's a decent amount of support right around here. The indicators are starting to turn around, so this is definitely worth a shot here. If you're into the currencies, it's not a bad opportunity here. Looks pretty decent, worth a shot. Worst case scenario, you're looking at around 80. Now, I know $1, $2 is a big move in currencies, but it's a $2 downside. If it was a stock, $2 downside versus a decent amount of upside, it's worth a shot. I've seen much worse trades before. NASDAQ, real quickly, downtrend. Nothing much to say here. Blah, blah. Doesn't look good. Nice little volume here. Nice volume on the upside. Finally, starting to wake up. This Obviously does not look tremendous. That doesn't look good, but the Nasdaq is just hanging in there. Really, I don't see anything on that now. Next time we'll focus on the daily. Dow, like we said last week, broke the downtrend here. Obvious. We mentioned that it was worth going long. You saw a nice little pop, you take it. And lo and behold, it's exactly what happened. As we can see in the daily charts, lo and behold, nice little pop. 1, 2, 3, 4. Nice little pop here. Obviously, pull back again. Now, I'll go back here to the weekly. RSI, that looks pretty decent. The MACD looks like it wants to cross over. And the volume is not great, but at least it's better than what it's been. So there's finally some signs of life on the buying. Obviously, this doesn't look great, but it could be a lot worse. On the daily, we're going to focus on some things. Slight negative divergence on the MACD histogram. That doesn't mean anything yet. Obviously, this still looks pretty decent. As you can see, the volume of the buying is a little bit better. Lighter, not light, lighter volume on the sell. This is of a concern, though. This is a little bit concerning, and you really don't want to see that. You don't want to see this amount of pullback on the money flow. But we're not going to take that too serious now. This is something that you want to keep an eye on now. This is the trend. This right here, these two black lines, that's the trend. All right, now, before we end, left shoulder, right shoulder, I forgot to put the head, here's the neckline. Inverse head and shoulders pattern. After a big downtrend, an inverse head and shoulders pattern is one of the best reversal patterns. Now, this is the area right here. Okay, that's the area that you want to keep an eye on. We break out of that. This is pretty much a give me. That, I don't know. But this is pretty much a give me. Things are starting to look a little bit better. Keep in mind, though, that in the long term, in the monthly chart, there is a head and shoulders pattern. After a big move, a regular head and shoulders pattern is a negative pattern. Now, in a monthly chart, that's what we see. And if you go back a few of my pages, you will see it. Monthly has more validity over the weekly, weekly over the daily, daily, etc., etc., etc. Okay, so keep that in mind. The last thing that I want to point at is the moving averages crossed, bullish cross over here, the 10 over the 20, then the 10 over the 50, and now the 20 looks like it's crossing over the 50. So there is some sign of life for the bulls, at least on the Dow. So take it, that's it. No calling it the Dow. It's too much of a risk, but this looks like a nice little support. You have a lot of things that'll hold it there. So you want to keep an eye over the next few weeks. Keep in mind also that this time last year we had formed an inverse head and shoulders pattern, and it started that tremendous run that we had last year. Tremendous run. Coincidentally, I don't know, but this time it's not weekly though. This time it's a daily inverse head and shoulders pattern. You definitely want to keep an eye on it. Thank you very much for tuning in to AO Finance. We're going to keep chugging along. We're going to keep working on it. Keep giving us feedback. Let us know what you think. Thank you very much. Enjoy your trading.